only dots of green. Interglobe Aviation is now down over 7%. SBI has fallen 6%. And the Nifty is now headed in for that 700-point decline. We're status quo, really. 3% lower for the Nifty futures at 23,857 as we speak, and all sectors are in the red. But let's ask Hiren Vaid from Alchemy Capital as to what is it that investors should be doing right now. And Hiren, hi, morning. Good to have you on the show. Hiren, we've seen this kind of madness before, these levels before, this kind of cracks and crashes before. But is it different this time around, given what's happening in West Asia? And the kind of move that you're seeing on crude and very swift moves at that.
Yeah, good morning and thanks Ayesha for having me on the show. Difficult day to be on the show today, but I think you're right. We've seen this in the past and it's very difficult at this stage to ascertain how long this will last, because a lot of this would depend on whether oil remains at a premium with the risk premium priced into it for how long. I think if it's a short spike, I think we can all live with it. But if this carries on for a little bit longer, I think it's definitely challenging given the fact that we are net importers of oil. And while we have been given a little bit of leeway in the near term to buy Russian crude, which can actually hedge us for some time, but I think higher oil prices help nobody. Having said that, I also believe that these kind of events in the market definitely bring buying opportunities. If you're looking very short term, the situation may look very scary, but these are exactly the points in time where things look very ugly, that if you have a medium to long term view, it has always been profitable to deploy money during risk off events like this. And I think this one is no different in my view.
Hiren, where do you deploy money then? Which are the sectors, which are the kind of stocks or particular areas which one should be looking at this point in time, given the fact of there's a global uncertainty, oil shock coming in, consumption is coming back in a small way, but again this shock may impact discretionary as well.
Look, as I said, it's difficult at this point in time to model how long this will last, right? But what happens usually is that people tend to either buy oil spike beneficiaries, or we tend to hide in sectors which are not likely to get very impacted by higher oil prices. But in my view, if one is a medium to long-term investor, you should actually be buying sectors which are today down substantially because of higher prices. Because it would be fair to assume that this situation won't continue forever. And therefore, stocks which have been severely damaged today because of higher spike in oil prices are the ones, and which are very strong fundamentally otherwise, I think are the ones that investors should be buying now, rather than trying to hide into what is so called as defensive sectors. This is not the time to buy defensive. The time to buy defensive was before the event happened. And it's not very easy to predict all of this, but my personal experience over the last many years is that this is the time to buy stocks and sectors which have been largely impacted by the spike in oil prices, because this is not going to last. And there will be a huge risk premium which would be priced into those stocks currently.
So would you venture to buy paints also, Hiren, right now? And I mean, aviation, yeah, rightfully so, because there's a very limited pool that you can buy when it comes to aviation, and that's a much larger consumption story as well over there. And then what about OMCs?
think for us, OMCs and paints, even before the crisis, was not a sector that we really liked. Paints because of the competitive intensity, and OMCs. Uh, Again, I mean, while the government has been very disciplined, but that's an area which, has not been a usual area of investment for us. So, that's something which is out of bounds for us, right? But I think that today, things like financials have corrected significantly. So high quality NBFCs or banks could be a good time to buy. And I think nothing to do with the current situation, but I do believe that after very low power demand, I expect power demand and the weather to be reasonably hot this summer. And therefore, I do believe that power should be an area of interest. So I think selective cap goods, power, financials are probably good areas, and even selectively autos if they have corrected significantly in this cycle.
Hiren, hi, morning. You spoke about some sectors to be looking at right now, and you spoke about banks. Within banks, it's the larger private sector banks that have taken a bigger knock to the chin. Could you talk to us about some names, if at all, if you could name any that are looking good, or even on the sectoral basis within banks? Which ones would you be favoring at the moment? Would it be larger private banks who've seen falls between 10 and 15% in the month gone by, or would you continue with the bias on PSUs?
So I think, again, I won't be able to talk specific names, but my sense is that, both private and PSU banks could be an interesting bet at this point in time. And so also some high quality NBFCs. I think this entire pack, which has corrected quite substantially, is probably giving us a good opportunity to add or create positions. It's also because the banks have taken the brunt of the fact that FIs have been aggressive sellers, and typically that's where their investments are significantly higher. So normally speaking, the large private banks are not growing at a very fast clip, but I think 10-15% lower, they definitely do look attractive. But our bet would be largely on the high quality NBFCs as compared to the banks.
Hey, Hiren, do you see domestic institutions to continue to be net buyers and supporting the market at this point in time, or they will also wait before market stabilizes?
I would guess so. I think today would be a typical day where they would be deploying their cash. So we've had a few of the large mutual funds who have been sitting on cash for a while for various reasons, and I think they would like to take this opportunity to actually deploy some of their cash.
Okay, Hiren, I believe you've got to get going on your next appointment, so we won't keep you waiting for long, but great to speak with you as always. Thanks for your time.
Thank you. Thank you so much.
Okay, on that note, let's take a very quick break. Haven't seen any improvement whatsoever from where we started off in trade. We're status quo really. 2.6% lower still. MCX though has sprung up in trade, and Reliance is just marginally higher. So some sort of comfort coming in there. But Coal India is the one which has been holding strong. ONGC though has reversed trend. It's now down 1% as we speak right now. Let's take a very quick break. We'll be right back continuing markets.